Welcome to Mintel's Little Conversation, real conversations with actionable insights into what consumers want and why. I'm your host, Andrew Davidson, based in New York, and today we have a special episode where I'll be speaking with David Flanzraich, CEO and founder of the Ness card, a new premium charge card designed for health and wellness enthusiasts. Derek is an entrepreneur who is passionate about making health more accessible for all. He previously founded Greatest.com, which is a health and wellness website targeted at 18 to 34-year-olds that was subsequently acquired by Healthline in 2019. After my conversation with Derek, I'll be catching up with Mintel's Diana Kelter, an expert in consumer trends, to reflect on the conversation and discuss the implications not only for credit cards, but for health and wellness and the lifestyle trends more broadly. Derek, a very warm welcome to the pod.
Thank you very much for having me. And thank you for pronouncing my last name correctly. That's a tough one.
Of course. Whereabouts are you today?
I'm based in Austin, Texas. Yeehaw.
Excellent. Well, okay. Well, let's start from the top. I mean, I've heard you describe the Ness card as Amex for health. What is the idea behind Ness and how did it all come about?
Yeah, the vision for Ness is pretty simple. We all are familiar with credit cards. We have them in our wallet. You talk about them on LinkedIn a lot. And elsewhere. But most of the credit cards that are in our wallet reward us for reward us for spending on travel or reward us with cash back. We believe that health and wellness, and I believe this for a very long time, and I'd like to think have been a small part of its growth and popularity, but we believe that health and wellness essentially is the next great lifestyle. That it is this growing secular trend, and that more and more people identify primarily with health and wellness over travel. That's not that people don't like to travel. It's just that day to day, they think more about their health and wellness and about getting more health and wellness. And we also, at the same time, are in a pretty serious health crisis that doesn't seem to get any better. And so the beginning of Ness really came from believing there needed to be some way to bridge these worlds together. Imagine if health and wellness could be more accessible and more affordable for everyone. And I became convinced that the path in was ultimately through the wallet. And because of my experience with Greatest, I also knew that health and wellness had very big margins, which would mean we could actually go kind of toe to toe and compete with some of the level of richness that sort of the travel cards offer. And that's what brings us to today, where we are at just the very beginning of building what we believe will be the next great credit card company. And that company will be built health first.
Excellent. And as part of that process, did you scope out, an ideal customer, an addressable market? What do you think is the potential?
Yeah. My background and experience has a lot of marketing in it. And so from day one, we were talking to potential customers, building up our conviction and confidence, basically, that people would be willing to move their spend, sign up for cards like this and move their spend towards it. And it came away pretty blown away, actually. The initial target for us, especially with the card we launched earlier this year, the premium card, is a more affluent target. The reason we went after that, frankly, was because they're lower risk credit card customers. And this is not my first company, but it is my first credit card company. And we felt like it was important to start with the folks that were the least likely to default, the least likely to commit fraud. And so we started with a premium focus, partnered with some amazing brands like Sweet Green. We are coming closer to launching actually a no-fee card later this year that will be obviously more broadly accessible. And that will broaden who we're going after ultimately, and really be, though it'll still have a pretty prime focus in the beginning, which is just the nature of building a competitor credit card company. The long-term vision is that everyone will have actually a Ness card in their pocket, and that they will be using those cards to actually engage with anything related to health in their lives and then some.
Yeah, I mean, it was particularly interesting that you went for a charge card and not, a revolving, unsecured credit card. Was that because of the simplicity of the approach?
Yeah, part of it was, the simplicity and the logistics of, again, getting a sort of nascent card to market. Obviously, with a charge card, you have less risk. People are not revolving. And so in theory, there's less risk. There's also less reward because there's less interest, possibility to make money from interest. But it felt pretty simple. We also felt like people were pretty comfortable and familiar with it in that affluent segment. Many of the Amex cards, including the Amex Platinum, is a charge card. Charge cards I'm assuming everyone who's listening to this does know, but many people don't know that ultimately it just means you have to pay it off at the end of the month and you can't keep using it and hold a balance. And actually, after a certain amount of time, if you haven't paid it back, you're no longer able to use it. So you can imagine that would lead to less losses. But you could also imagine that if people's intention is to pay every single month because they can afford it, that doesn't kind of create a deterrent. It is a form of a credit card. I do think ultimately, I'm going to ask the question without you asking it, but I do think ultimately we probably overrated how many people would feel comfortable with a charge card. We thought it would actually be an advantage, but it turns out that in the world of credit card marketing, at least, the more ways in which you're different, the more likely it is that people will tune out, or the harder it will be to kind of, get people to understand what you're building. And so there was something about calling it a charge card, making it a charge card, that actually I think ultimately didn't help us. It added one more wrinkle. When we just wanted to be different because we were health and wellness first, suddenly we were health and wellness first, and also it's a charge card, so you can't hold a balance. And many people think of that as a bug, not a feature,
So that ended up being a bit of a barrier. Which I get. I mean, obviously, Amex.
That's my sense. Yeah.
Yeah, it's really the only company doing that, certainly on the consumer side of things. I mean, and then you sort of came down to a $349 annual fee. Any insight into how you got to that?
Yeah, we basically created a card that we believe is as valuable as the Chase Sapphire Reserve or the Amex Platinum. As competitor cards, we didn't believe we could convince people to cancel, though some of our members actually have canceled their Chase Sapphire Reserve and their Amex Platinums. They've told us that. We assume most of them would continue to use their travel spend at least on those cards. And so we wanted to be able to be kind of a good complement versus just a full out replacement, especially as we were, building up our marketplace, building up our offering, building up our product. The premium card is still in beta, right? So we're still, iterating on the very early days of, we're not even in past the first year, right, of this card program being live. Many people think the Chase Sapphire Reserve was this, huge success out of the gates, or any of the Amex cards. And the reality is almost all of them take a few years to kind of find their footing. And then they can offer all those, juicy sign-up bonuses.
Let's talk about the launch and the marketing rollout. You launched in March of this year in public beta mode. So what was your thinking around that, that approach to a launch, and, what did you sort of get out of that? And also, was there any consideration to the timing of the launch?
I think what we want to do is launch the card as quickly as possible. So fundamentally, the idea was to get the card out the door. Now,
how long was it in development for?
We worked, so we basically built our credit card platform from nearly scratch. That's not true of many sort of starter companies that rely on outside sort of credit card as a service or even banking as service solutions. We didn't. We actually took the hard road. We raised a lot of money to do it, but we built our own experience, our own product, our own rewards program, our own marketplace of products and services. Now, partially we were forced to do that because the health and wellness angle meant that we had to build new things. But part of that is because our vision is very big, and we believe we'll one day have a whole suite of credit cards. We're not just building a credit card, we're building, a credit card company. So that kind of forced us to take the harder route. That meant it took longer to get the card out. But once the card is out, it means it's easier for us to launch new products. And we actually collect meaningfully better on the economic. There's much more sort of upside for us on the economics because we're not splitting it with many partners. And so the idea there is that then we can create more rich, compelling rewards for consumers. So that sort of those trade-offs were what meant that I think we maybe spent like between a year and a half building the credit card platform and launching our first product. That's a lot quicker than it's been in the past, but you can do it faster if you take some shortcuts. We didn't want to take many shortcuts. We wanted to do kind of things the right way for the long term. In terms of the kind of marketing approach, fundamentally, like the market around direct to consumer has shifted. We are a venture-backed startup. We've raised about $20 million to date. And consumer first venture-backed startups are not having a great moment right now. Definitely not consumer fintech companies. And so it became pretty clear as we got closer to launch that we didn't basically like spending a lot of money to acquire a lot of customers and hoping for some kind of enormous viral traction was kind of going to be a fool's errand. It wasn't going to get the response we needed from investors. It was going to take us long enough to really figure that out, that we wouldn't have the resources to support that and fund that. And so we called it this public beta because our focus here was actually on driving engagement, finding the right kinds of customers, and using these lower risk customers, these members, to actually build up our experience, build up our marketplace, build up our merchant database. We have our own healthy merchant database of 30,000 now, plus healthy merchants that people have helped us flag and identified, because what the hell is a healthy merchant? We kind of had to like answer and address that for ourselves, and learn and get really good at KYC AML, at the credit and compliance parts that go into building a tremendously, secure and compliant program, which is very important when you're, looking to expand and scale credit card programs. So our emphasis has actually been on driving engagement, getting people to open up our app often, getting people to spend a lot. And we've seen some pretty tremendous numbers, actually. So that's been a big win for us.
Were you as part of that beta when consumers were signing up? Were you soliciting feedback from them as part of that process?
Yes. Absolutely. We've talked to every single member multiple times. We've talked to members who, were approved and didn't accept. We've talked to many who were rejected. We had created a Slack group, actually, of users, and still talk to them basically, multiple times a day, asking them for feedback. We're pretty intense about these things, and we really feel like, again, we're just in the very beginning stages of building the next great credit card company, and learning what people need to know, what people didn't understand, learning what sort of the rough edges are and how we soften them around the experience. That's been tremendously valuable, and our product, I use our card obviously all the time, and has really, it's like a really incredible product. It's very simple ultimately, but it's pretty incredible, and it's mostly because of the feedback from the members that are using it and loving it every day.
Yeah. Was there another fintech or credit card launch that you sort of modeled yourself on, or you looked to for sort of interesting insights?
I don't know about like a particular specific launch. I mean, we looked a lot at the Revolut story because that's really, I think one that a lot of people look at, and they share some of our sort of values. I think that that comes to mind. And then when it comes to other credit cards in market that we admire and feel like there's a lot to learn from, the one that comes to mind is Bilt, B-I-L-T, mostly because they're similarly using a sort of unique wedge into people's wallets and then finding engaging ways to, tap into more of that wallet. And it helps that they've been pretty successful, both in terms of members knowing them and using them, but also in terms of investor perceptions in a world where we're a venture-backed startup, and that's our reality. So,
I want to talk about that because, obviously we mentioned the marketing, and you mentioned the 20 million in funding, and you look at, obviously the credit card business is effectively it's a marketing business, and you look at someone like Amex, who you referenced, spending, I think $5 billion again this year. Obviously, it's not possible to do that, but you still have to gain awareness, get your name out there. Yeah. What are some of the tactics that perhaps that you've used?
That all sounds, one way to look at that is that sounds like a big challenge. And, like they're the Goliath. But like we all know how the David and Goliath story went. And the short answer is that David gets to do a lot of interesting things.
Right.
David has the opportunity to not just do everything, has the opportunity to do new things, try new things, to experiment and find new channels and get amazing at other channels that they're not great at yet. There was never a moment where we turned to one another and said, you know what we're going to be amazing at? We're going to be the best direct mail marketers, in credit cards. We never looked at each other and said, we're going to be the best paid social, acquirer, social media, ad acquirers in credit cards. That might come one day, and both channels are, clearly like can be effective in direct mail, clearly in particular. But, instead we focused on influencers. We focused on building deep partnerships. We focused on kind of unique opportunities to get in front of people when they were at the point of sale. And the greatest successes we had were in truly very deeply authentic influencers and brands who loved what we were doing. And there was some unique tie both ways to both the audience or the existing customer of the brand and why they would come use us and why they would help them as existing customers and audiences of the brand. And that tended to be the most effective. And that level of sort of, frankly, thoughtfulness, care, and authenticity is very hard for, I would say, the big boys to replicate. We were able to, and people have all heard of Amex. Most people who have an Amex card, who are going to get an Amex card, probably have an Amex card. And so Amex and Chase and Capital One are spending tons of money, but part of it is also that they don't have to launch something new. They have to convince people to look at it a new way or a different way. Whereas for us, we feel like we can actually, as long as we create an amazing product, an amazing rich value proposition that people really find a lot of value from, we believe that above all, no matter what marketing tactic we use, it'll spread by word of mouth. And that's really ultimately the most effective way to build something new and great.
You mentioned the Built Rewards card, and actually previously on this podcast, I had the pleasure of interviewing Anka Jain, the CEO of Built.
Okay, yeah.
Also interviewed Andre Cherney, the former CEO of Aspiration. Of course, and listeners can go back and listen to both of those podcasts on our channel. But the fate of both of those cards, couldn't be more different. The Aspiration card has been pulled, sadly, from the market, whereas Built is now being backed by Wells Fargo. We've seen a number of challenger cards get launched, but then subsequently get pulled from the market. I mean, you've had some layoffs recently. What was the reason behind the layoffs, and how is the business going?
Yeah. Well, first, it's a tough market out there for venture-backed companies, as we've established, and in particular for expensive, non-meaningfully, profit-generating venture-backed companies. We anticipated not making meaningful amounts of profit in the first few years of our functioning, and relying on outside support and capital. That might seem to some of your listeners to be silly or foolish, even, but most of the great challenger companies, much less credit cards, have raised, we've raised $20 million. Again, there's not a single one of them that hasn't raised 3, 4, 5 times that before they really are able to make it. And so we'll raise more capital and we'll continue growing, but we kind of were forced to shift the way we think about our approach to be a little bit less all kind of full speed ahead and a little bit more one step at a time. And this is my first credit card company, but not my first business. And it's not my 30th business, but and I do think, right, so much of the job of the CEO is to listen and understand where the market is at, believe, unimpeachably in what you believe in, but also not be unrealistic about, what the market looks like. And so we've shifted. We did unfortunately have to let some people go. It's probably the most painful part of my job. And I'm not the one getting let go, unfortunately. But it is also necessary for a business to survive in a different market. And so the question broadly is not, what does that mean for us, but more, what are we doing building a challenger credit card, right? It's really hard to do. And you said, Aspiration and Built to me are two very different stories. Aspiration had a different business that was really working, right? And so I imagine the credit card was ultimately just not like a focus of what essentially was a neobank. And Built in probably part of their success is not just that they partnered with Wells Fargo, but it's that they started partnering with Wells Fargo. That might be
an
less
injection
a
of
measure of their
funding
success.
and all that came with it. Yeah.
And just cost of funds is a major source of expense for credit cards, especially credit cards that are in established banks like Chase and Amex. And so having a bank partner like that can not just be a sponsor bank, but also fund the receivables, and plus do some distribution, by the way, is really an advantage. And so I look to, again, Built as big, I admire what they've built tremendously. And I do think Aspiration in some ways also proved out some level of niche-based lifestyle. They built a pretty impressive business, even if not a credit card one, it seems, tied to people's environmental sort of leanings. And I think health and wellness is much more popular, by the way, than people who are interested, who are willing to sign up for a bank that represents their interest in the environment. And so that gives me some confidence. But the short answer is the road ahead is hard. I would love to pretend that, it's all, kind of like all up and to the right. But the reality is this building a challenger credit card company is really tough. There's a lot of challenges until you get to some scale. And so my job is just to make sure we get to that scale and less as quickly as possible, but more getting to that scale eventually and growing from there.
Yeah. But in terms of the product itself, what types of rewards and benefits are actually resonating? How's that going?
Yeah. So for those of you that don't have a Ness card, for those very few of you, I'm sure, essentially today's card and the no-fee card will work, broadly the same. It rewards you with points, much like your travel, focus card does. It rewards you with points for spending at healthy merchants and for doing healthy activities. And so healthy merchants actually are defined very broadly. The obvious stuff like healthy food and fitness and gym, memberships, that's all pretty obvious. But we also include salons and spas. We include anything healthcare and mental health and therapy related. We also include all groceries and pharmacies. To my knowledge, we are the best performing card on the market for groceries and pharmacies, and our no-fee card actually should be too. We're still finalizing some of the ultimately what the rewards will look like, but fundamentally, we should end up being the best bang for your buck for essentially everything that's not travel, even with the no-fee card. And so the idea here is, if you care about health and wellness and you value it, using this card will get you points, and you can use those points that you're earning in our marketplace of health and wellness products and services. This is also unique. You're not just using those points in the same travel portal that everyone else has. You're not using them you're not just getting cash back. We've actually built 100 plus partners into this marketplace, and the rewards you can earn really run the gamut from everyday things like a sweet green salad, a Chipotle bowl, a class pass credits, or solid core class. So sort of your everyday stuff, all the way to a full body MRI scan with Prenuvo, a weekend getaway to an Amman resort, And then we've got things in between like massages and Warby Parker glasses, prescription glasses and things like that. So the idea here is people end up engaging a lot more with the everyday rewards. We like that. We want you to make health and wellness, more a part of your life. And there's also still that sort of aspirational nature of one day I want to do I'm based in LA and I want to do a, shopping spree at Erewhon. And that's, a reward you can save up for.
Yeah, well, that's interesting. You have those everyday options because, we've always found in our research that the more, cardholders redeem, the more satisfied they feel. And that obviously is self-perpetuating.
That was a big focus for us because, again, we think one of the differences, frankly, like benefits we have against this notion of a travel card is you don't travel as much as you engage in your health and wellness.
Right.
How many
Save
times
up for 2
a day
years,
do people... Yeah, and there's a deep and profound in our customer research, which you mentioned earlier. There's actually a pretty tremendous amount of dissatisfaction with both the value of those points, the travel points, which tend to get devalued over time, the frustration around having to gamify those points. Our points are always worth at least a cent, sometimes more. You don't really know what they're worth in Amex and Chase and all those different platforms. And frankly, they're trying to play games with you sometimes. You thought that you could get that trip, but you can only get that trip on Tuesday mornings at 3 a.m. in the morning using your points. And people also, they just feel like it never adds up to what they ultimately have envisioned. Instead of taking that beautiful trip to Tahiti, they're ending up using that for 50% off their flight, to Chicago or something like that. And so it doesn't end up actually being this aspirational thing they were hoping for. And so though Chicago can be very nice. And so we were really intent on that. And nobody opens up their Amex or Chase app every single day. Our average member today opens up the app nearly twice a day. Looking for new rewards, looking at the different rewards that exist, saying in their activity that something was a healthy merchant or making sure that it was properly, categorized. And so we think that's just the beginning of how
really
it can be different.
It's sort of high, sort of the idea of a high engagement, high redemption sort of premium product. That's certainly unique. I was just interested though, any one of those particular things got the Ness card Slack group really buzzing, like, one particular thing that you added?
Sweetgreen is our anchor partner, and people love Sweetgreen. Definitely in our target customer base. That's always the one that gets people going. We had some people who wanted more sort of male-focused apparel, like fitness apparel options. And so we added some of those. And we're very proud of the engagement. And it really hints at sort of where we think the future of this business actually is going. And not just focus on consumers, but that unique amount of engagement, that ability to navigate and drive people to discover even certain rewards or benefits they didn't know before is part of what's been resonating so much with health plans, and why we're starting to work on actually building co-brand cards with health insurance companies. This is something that we haven't shared publicly yet, but the sort of application of what we've already built, a health first credit card platform. But imagine now you're getting the card not just from, applying online, but you're actually getting it as a replacement to the laminated, dinky health insurance card you get in the mail every year. And now, if you qualify and connect your checking account, you can actually use the card that your health insurer sent you to get extra points on your premium, on your copays, on any healthy spending, get rewards for going to your annual wellness check and getting your flu shot. If you run into a big medical expense, you can pay it down over time with 0% APR. The idea is that you can track your out-of-pocket spend and deductible more easily, overlay and utilize an HSA, FSA without having to use a separate debit card. The belief from day one has been if we can basically earn the right, if we can earn the trust and the relationship to be inside of your wallet by providing you real, true competitive value, better value, ideally, than anyone else, we can then help guide you to better decisions. That's something that health insurance companies who have a real vested interest in people doing better things, going to more cheap, providers, and not running into medical debt, are really have gotten really interested in. And so we're very excited about that future for us, and sort of is the next stage of this business.
That's amazing. So let me just to underscore that. So the vision there is what you're saying is that the health insurance card that we all carry in our wallets, those who have access to health insurance, could potentially be a co-branded Ness card. Exactly.
Yeah. And think about it. Co-brand cards essentially are in every other market, in retail, airlines, the transportation, cards, even the tech companies that you engage with. Why not health insurance and healthcare?
Absolutely.
And healthcare is really, I believe, payments and providing services. It is effectively payments. And so we believe the killer app for healthcare actually is a credit card. That's something that's driven us from the very beginning. And we are, again, just at the very start of sort of, that journey. But we're very excited about the uniqueness of what we built and how it applies to this very, a space that needs a lot of innovation and improvement.
Absolutely. And that sounds extremely innovative and exciting. Obviously, consumers spend so much money on healthcare. And so getting something back for it, obviously, would be groundbreaking. So,
and fundamentally, shouldn't health insurance companies pay for people to be healthy? Like, how come health and wellness is so expensive? That's basically the big question that I was asking at my last company, and what we asked when we were starting this one. And the answer is because, unlike almost everything else, no one's incentivized to pay for that. Now, some big employers are, right? And because they want people to be healthy, and then they cost them less, right? Pretty obvious. Health insurance in this country, though, is very bizarre, and it's based mostly it's mostly tied to employment. People spend a very short period of time with their employers, typically, and never shorter in this country. And so the idea is, how do you track with people over time? The idea that they could actually become a Ness member the same way they become like an Amex member or a Chase member, and that can actually follow them from one insurance company to the other, or with them as they stay with an insurance company and have kids and change up their insurance plan, but stay with the same company. That idea that you could actually be sort of this relationship layer with consumers, and in the process help align incentives between the health plans and the people themselves, so that you can actually justify paying for people's gym membership and for their healthy food. And that's ultimately the big vision of how we make health and wellness more affordable and accessible for everyone.
Excellent. All right. Well, Derek, thank you so much. It's been a real pleasure. I wish you and the team at Ness the very best. But thanks again.
Thanks, Andrew. Bye.
All right, well, that was a fascinating conversation. Derek Flanzraich has an innovative idea and a long-term vision. He really seems to be onto something, and I, for one, hope he gets some more backing to see where it all goes. All right, well, I'm now joined by Diana Kelter, Associate Director of Consumer Trends here at Mintel. Diana, welcome back to the Mintel Little Conversation podcast.
Hi, Andrew. Happy to be here.
Whereabouts are you today?
Well, I loved hearing Derek was based in Austin, because that is exactly where I am based as well. I live in Austin, Texas.
What are the chances? What are the chances of that?
Maybe we'll have to meet for a cold plunge sometime in Austin.
So what did you think of our conversation?
So I thought this was a really fascinating area of focus. So as you mentioned, I sit on our trends team at Mintel. So I'm always looking at these higher level macro trends. And so well-being has been on our radar for really quite some time. Even long before the pandemic, we were seeing a rise in lifestyle well-being, holistic well-being. Obviously, the pandemic created even more interest in well-being. So I think the focus of this card is spot on with trends we're seeing, that well-being is becoming an area of focus for consumers, and not just in the traditional areas, but the holistic sense that Derek touched on, mental health specifically being something that consumers are focused on. And then just the accessibility to have access to well-being. I think was touched on in your conversation. And that's where I see an interesting bridge between the wellness space and the finance space, which is they both share this underlying sense of consumers understand what has to be done. They know they have to budget or think about their spending, especially in economic uncertainty, but it's hard to do that. Sometimes it's not what you want to do. And the same thing with well-being. People understand the foundational elements that go into wellness, diet, fitness, therapy, all these different components. But once again, it's not easy to do these things. That's why they're always looking for support to create those steps. So I think it's interesting to see a card bridge those worlds where the fundamentals for the consumer are similar. They're looking for that education and that guidance. So I think this card is interesting in that sense because that really, like as mentioned, hasn't been created before.
Yeah, so one thing you touch on there is sort of financial wellness and health and wellness, and maybe that could be one way that this card develops in the future.
Yes, we actually do have data. We did a financial wellness report in the U.S., and we see that 75% of U.S. adults feel their financial wellness impacts their overall health. So it really goes to show wellness is really something every industry has to be paying attention to. It isn't just your traditional categories anymore when you think about wellness. It's something that we're seeing consumers look at really across every aspect of their life, from finances, especially because at the end of the day, it impacts your physical health, what you can have access to, what you feel you can afford. And obviously the stress of finances impacts your mental health. But one thing I thought was interesting too with this card is the target audience seems to be kind of an affluent millennial or even an affluent Gen Z, which I think is really something that is of interest for a lot of finance brands and brands in general, is to realize that there are some affluent Gen Z consumers out there. We tend to think of them as still being young and not really having the means to afford maybe a card that has a fee associated with it. But we do see, I'm actually doing currently a presentation with one of our Comper Media analysts, Nicole Bond, about the Gen Z finance area. And we really see it's kind of almost a third. I love how she breaks it out where you have your kind of your novice kind of Gen Z consumers who are really looking for that kind of framework, the education. Then you have like your transitional Gen Zers who are kind of know what they have to accomplish, but they're still looking for that support. But what I think is the target for a card like this is that affluent Gen Zer who has their bases covered. They're kind of a little further along in maybe their early career. They're in the 25, 26 age range. And a card like this would probably speak to that audience who is very focused on well-being and kind of they're looking for that, what can I get? And maybe it is travel they want, but I think in a lot of cases, we're going to see this crowd especially seek these well-being benefits as their rewards.
And it's interesting even that, American Express has proven that younger consumers will pay particularly for benefits that they see, that they think are valuable.
Exactly.
Well, yeah, yes, really fascinating conversation. I mean, there were some really interesting takeaways, I think, from my perspective. Obviously the idea of a charge card, as Derek described it, as a bug or a barrier was notable. I think particularly, in this current environment where consumers have, record levels of outstanding debt. I think, one thing that really stood out to me was the high levels of engagement. I mean, Derek referenced members accessing the app twice a day. And that sort of really struck me as something that was quite notable. You take a long, that if you're saving miles for a flight, that takes a long time, but they've got benefits and redemption opportunities built in to encourage members to access the app twice a day. So this idea of a premium product with high levels of engagement was, I think, quite unique.
I think, Andrew, what you're saying about the daily engagement is interesting because I know you mentioned American Express, and I think what American Express has done well is brand a lifestyle. And I think it's interesting, and I think that's what's going to connect with younger consumers is going deeper than the transactional. They want emotional connection to a brand. They want rewards that have an emotional connection. And I think we've even seen it with the success of something like Venmo with younger consumers. It's not just about transaction of, okay, I need to send you money. It's like a social feed, and it kind of makes it more of a lifestyle, something that you engage with. And I think obviously well-being has become a lifestyle. I think that's exactly what I was talking about at the beginning. It's not just a single industry anymore. It's everywhere. Every industry has to pay attention. So I think looking deeper than the transactional is what's going to set anything apart right now, whether it's a financial card, whether it's a fitness brand, whatever it might be. Connecting to the lifestyle is really what's going to resonate with your millennial and your Gen Z audience.
Yeah, that's a great point. I mean, I guess the third point for me was really the announcements. Obviously, yes, the Ness card is focused on these premium customers, but he talked about a no-fee card in development and on the way. And then, the real sort of groundbreaking announcement that of leveraging what Ness has built so far into a co-branded credit card with a health insurer. So that was, breaking news. And it would be a first for the industry and seems like a huge opportunity.
Yeah, I think that is really interesting, especially kind of going back to your Gen Zers and even your millennials. We assume that they are more inclined to go towards these trendy fintech or newer disruptive cards. But what we find is that there's layers to this. So maybe the transactional component they have is with this more disruptive card, but they're also their trust still lies with these legacy institutions. And I think we could say the same with insurance. They trust these institutions that have a legacy. They are built into this kind of industry. So we see it with the financial space. We see it with insurance providers. I think we see like 60% of Gen Z adults are more likely to trust a financial institution with history. And so I think it doesn't mean that that's where they're not going to turn to these disruptive startups. It means they have to be, their layers really go a longer way. When you have that partnership, when you have that co-branding, it creates that unified experience of bringing in something that's trusted with something that's meeting the current needs of the consumer.
Yeah, no, you're right. Trust is key. I mean, it's a key challenge for these new startups, these fintechs, as well as just building awareness, which requires a lot of advertising. We talked about that quite a bit in the podcast. All right, well, thank you, Diana. That was really useful context. It's clear that Ness is trying to adapt to the realities of a challenging environment, but also staying the course with what seems to be a great idea and a great opportunity. So thank you, everyone, for listening. You can find my interviews with the founders of Aspiration and Built on the Mintel Little Conversation podcast channel. The conversation doesn't end here. Head over to Mintel's LinkedIn and Instagram and let us know what you think. We'd love to hear your thoughts. If you want to know more about Mintel, visit mintel.com and sign up to become a member of the free Mintel Spotlight community. Make sure you never miss an episode by subscribing on Apple Podcasts, Spotify, or wherever you get your podcasts. Goodbye for now, and we'll catch you next time for a new episode with the Mintel Little Conversation.